Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. In a busy week of monetary policy decisions, stock markets around the world rebounded after the U.S. Federal Reserve commenced its rate-cutting cycle. Central banks in the UK, Japan, Norway, and China held their rate steady, meeting market expectations amid weakening domestic inflation. The Federal Reserve in the U.S. lowered Fed funds rate by 50 basis points, surprising many market watchers and signaling additional rate cuts later in the year. The jumbo-size rate cut of 50 basis points was also seen as the Fed's acknowledgement that labor market conditions are moderating and inflation is falling at a faster than expected pace. However, the larger rate cut may fan inflationary forces in the months ahead, prolonging higher inflation in the next year. But for now, investors around the world cheered the Fed's aggressive move and awaited additional rate cuts later in the year. The Bank of England led its policy rate at 5% and said that the central bank prefers to lower rates in a gradual fashion. Inflation hovered around 2%, while service inflation climbed to 5.6% and core inflation increased to 3.6% in August. The Bank of Japan kept its short-term rates at quarter percentage point and left its yield curve unchanged after a policy meeting on Friday and reiterated its hawkish outlook. The central bank decided to take a wait-and-see approach after lifting rates twice this year, in March and in July. The policy committee said it needs more time to evaluate the impact of its hawkish stand on the economy and financial markets before it decides its next move. The central bank in Beijing, the People's Bank of China, in a surprise move, announced its plans to hold rates steady despite weak economic momentum and a stable exchange rate. Investors widely anticipating a rate cut following a jumbo-sized 50 basis points cut by the U.S. Federal Reserve on Wednesday. The People's Bank of China held steady its one-year loan prime rate at 3.35% and five-year loan prime rate at 3.85%. Economists still held out for the central bank to lower rates in the months ahead, following the latest string of weak retail sales, industrial output growth, and falling investments in the property sector. The Norges Bank decided to leave its main rate at 4.5% and added that the rates are likely to stay at the current level till the end of the year, but the central bank held out for a possible rate cut in the first quarter of 2025, citing underlying inflationary forces are still elevated and inflation is expected to ease to 2% only in 2027. Passenger car registration in the European Union plunged by 18% in August, reversing an increase of 0.2% in the previous month. In four leading markets in the Union, car sales declined amid weakness in battery-operated vehicle sales. Passenger car registration in Germany declined 28%, in France fell 24%, in Italy dropped 13%, and in Spain decreased nearly 7%. In other economic news around the world, existing home sales in the U.S. declined and median home prices increased amid lack of inventory. China's weak retail sales and industrial output growth confirmed the weakening economic momentum, and new home prices in 70 cities declined, indicating protracted property market slump. Japan's trade deficit shrank in August, but exports struggled to recover amid weather-related shutdowns at several large manufacturing operations. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury hovered near 3.7% after the Federal Reserve commenced its rate cut cycle with an aggressive cut of 50 basis points. Crude oil prices in Texas rebounded to $71 a barrel and halted a 6-week slide amid demand growth optimism and rising supply disruption risk after Middle East tensions rose. Natural gas prices in Europe fell 3% to €35 per megawatt hour as traders reviewed demand revisions and worried about the potential supply disruptions in the region from Norway and the Gulf of Mexico after Hurricane Francine. The euro hovered at $1.12 amid general dollar weakness after the Federal Reserve started its rate-cutting cycle with a large rate cut that surprised many market watchers. The yen strengthened to 141 yen against the dollar after the Bank of Japan held steady its short-term interest rate but signaled possible rate increases later in the year, and core inflation accelerated in August. We now shift our attention to major stock markets in the US, Europe, and Asia. The S&P 500 and the Nasdaq Composite advanced for the second week in a row after the Federal Reserve delivered a jumbo-sized rate cut to engineer a soft landing. European markets advanced for the second week in a row, tracking gains on Wall Street. The Nikkei 225 stock average rebounded 3% for the second consecutive week after investors reviewed decisions from major central banks. Hong Kong indices surged 5% and mainland China indices struggled amid lingering economic weakness after inflation data suggested deflationary conditions despite solid growth in exports in August. Indian market indices rebounded to new record highs and extend their string of record highs this year amid general optimism about the economic growth outlook and steady flow of funds from domestic investors. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. FedEx decreased 13%, and the parcel delivery company reported a sharp fall in earnings and company lowered its annual outlook. Intuitive Machines soared 47% and the space exploration company was awarded a contract by NASA that could be worth as much as $4.8 billion. Nike increased 8% and the athletic footwear maker said Chief Executive John Donahoe would step down from the office in 3 weeks. Chewy, the online pet product store, plans to raise $500 million, and Casella Waste System plans to raise $400 million through a secondary offer. Mercedes-Benz Group dropped 6%, and the luxury automaker said it plans to invest over $2 billion in China with local partners and accelerate its transition to electric vehicles manufacturing. The company said its adjusted operating earnings before interest and taxes were significantly below last year's level amid a rapid deterioration in sales in China. Luxury goods makers and fashion designers in Paris, London, and New York declined as much as 3% because of the worry of their exposure to China. Darden Restaurants jumped 7%, and the company announced weaker than expected quarterly results because of the weakness in its fine dining restaurant, but the company reiterated its annual outlook. Ocado Group jumped 6%, and the online grocery store operator in the UK and technology company reported strong fiscal third quarter results. Close Brothers declined 5% in London trading, and the company said it agreed to sell its wealth management unit to a private equity firm. Next PLC, the UK-based apparel retailer, estimated an annual profit of £1 billion. We now review upcoming economic announcements in the week ahead. In the U.S., investors are looking ahead to the release of PCE price index, an alternative measure of inflation amid expectations of an increase of 0.2% from the previous month in August. Investors are also eyeing the release of second quarter GDP growth revision, durable goods orders, and new and pending home sales data. In Europe, investors are looking forward to monetary policy decisions in Switzerland and Sweden, and both central banks are expected to keep rates on hold. Moreover, France and Spain are set to release their preliminary inflation numbers, and Germany is scheduled to release its labor market update. In Asia, China is set to release its industrial profits in the year up to August, and the Bank of Japan is set to release its minutes of previous policy meeting and provide insights into the timing and the size of possible rate hike. You can review daily U.S. and global financial markets, market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Redera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next